Hello, everyone, and welcome to Connect, the podcast of the California MBA. I'm Paul Gigliotti, CEO of the California MBA. And if you're here, you care about building better for your business, for your clients, and for the future of housing. Before we begin, I'd like to thank our 2026 President Council sponsor whose support makes these conversations possible. AmeriHome, Consolidated Analytics, Loan DNA, yours truly, Funding Shield, CMG Finance, Guild Mortgage, Rocket Mortgage, Wiener Brodsky Kinder, and Western Alliance Bank. Thank you all for your continued support and partnership. All right, so to our audience today, I'm excited to welcome a very good friend of mine, a supporter of the California MBA and a supporter of the industry, Ike Suri, founder and CEO of Funding Shield, a company redefining wire and settlement risk protection across the mortgage ecosystem. Welcome to our show, Ike.
Thanks for having me. Good to see you.
Good to see you too. I just saw you last week.
Yes.
Ike is not only an innovator in fraud prevention and capital markets protection, he's also a California MBA board member and an active leader in shaping how our industry thinks about risk, trust, and operational security. Ike is also a board member of MISMO. And Ike, actually, let's share with our audience, you just had this amazing announcement that you just put on LinkedIn a few days ago. Can you share with us your next endeavor and how that supports Funding Shield or vice versa?
Yeah, sure. We just launched a company called Title Shield. It's a Funding Shield affiliate. It's our expansion into the title world. We've been, working quite hard for a number of years where our clients, it's been a blessing to grow with clients that have needs. And the automatic expansion was to get into that business to service our clients. A number of our products deal with, as you described, the closing arena, which is the most complicated part of the business, and data so disparate, disjointed. And our solutions help provide this middle layer, this infrastructure layer of technology and solutions that deal with proprietary data, source data, real-time data to manage risk, prevent risk, manage regulatory compliance, mitigate these exposures, and then also remediate them in a real-time basis. So it's an embedded layer. And that automatically leads into what's coming next, which is underwriting. So having a title agency company just made sense for us to have.
Right. So now you're bringing it all together with your
Yes.
title agency. And is your title agency open to residential IMBs and lenders throughout the
Yes.
country? Nice.
100%. We're day
Great.
one in 50 states. And
Nice.
we already have a few existing clients that have ignited the revenues and the business with us. The beauty of it is that we're doing most of the legwork ahead of an underwriter, and that benefits our existing clients with better pricing, great data, digitized, efficiencies, remediated and closed, all cohesiveness in play. So it works.
Well, I cannot wait to watch this endeavor skyrocket into success like
Thank
many
you.
of the other endeavors you have in our mortgage lending industry. So let's jump in with a couple of questions and conversations and
Sure.
topics. We'll start with risk landscape.
Yeah.
Like, let's start at the big picture. Fraud, wire risk, and settlement exposure are not new, but they've evolved dramatically with all the technology that's out there that's supporting our industry. It's also on the back end hindering our industry. From your vantage point, how has the risk landscape shifted over the last few years, and where are lenders most exposed today?
Great question. I mean, as
It's a
you
loaded
rightfully
question.
as you rightfully said, the risk has always existed. It's a matter of how much risk management that the lenders wanted to execute upon. In the last number of years, that exposure of not executing or not opening up your closet where you've got all these skeletons of not necessarily executing upon and handling risk has come into this, you know, climate where disjointed data, disparate data, and volatility in the market, and the quick advancement of tech that's been made available for all solutions has opened up this huge gap or endpoint vulnerability and so forth, and lack of resources if someone's not making money as a lender, or tech stack is not in order, because tech stack is not as simple as historically to have it just in order day one. and people are invested in them for quite some time. They can't just unplug, and they have to find a new plug and play solution, or find a complete solution or a part of a solution. And the regulatory compliance around it has also been such that they've left that decision making in the lender's hand. How much do they want to manage? Do they want to manage all 100% of the deals going through them in a manner that they are doing everything that's required as regulatory compliance and managing every risk exposure? Most clients historically have done maybe X percentage, less than 5, less than 10%, not every transaction being executed upon in that manner, and not having the tools or the affordability. So that's led to a climate where fraud has only evolved to such a large degree. It's almost 1 out of 2 transactions, if you look at them, are exposed to risk from elements of neglect, data misalignment, no verifications being done as per regulatory compliance, and if being done, not necessarily being remediated, or left for post-close remediations that cost a lot more money and has other ripple effects. So risk has evolved in such a way that every workflow, if not being managed right, with having contained parameters in place of data security and data at rest, data in transmission, data at exchange, and at all those levels, it's exposed to risk. There are countless number of ways of how fraud as a business is made available in the market, from funds from overseas to private equity funds over here, where fraudsters are just dedicated to watching when large money is moving, and they can participate in, coming in and executing upon a plan via various different, schemes. It could be telecom, it could be networking, it could be audio, it could be video, it could be taking over your Outlook email, backdoor entry. There's so many different ways. So they're countless. There's no one silver bullet to solve those problems.
Right. That's a staggering statistic. When we first started with this question, I think you said 1 in 2
Yeah,
are prone to
yeah,
fraudulent activity. That's huge.
huge.
Uh, thank goodness for our industry that there are organizations like Funding Shield out there that are there to protect and catch, before
Yes,
the issues arise, right?
yes,
Um, Let's go on to enterprise level thinking. So, Funding Shield is often viewed as a fraud prevention, but it's really about enterprise protection. So, catching it before the fraudulent activity occurs. Should
yes,
CEOs and executive teams be thinking about segment risk today at the board level, not just at the operational level? Like, is there, are there
100%.
like different workflows, things to change about solutions that they're utilizing? How do they go about that?
Oh, 100%. I mean, in this environment and over the last few years, what's been happening in the market, not just in our industry, but all industries, there's 2 super priorities for all businesses. And one has been to bring down cost, because the socioeconomic climate around business has been such. Cost
Mhm.
of money's gone high, business is low, jobs are low, and that leads into a very strong desire of bringing down costs. That comes with tech, automation, and so forth. The second most important is dealing with fraud. Those are
Right.
2 super priorities for any business today. So corporations at a board level already have that agenda, that the armory needs to be in place. And by that, I mean their tech stack needs to be in place, because tech is helping with both those priorities. One is helping with automation, cutting down costs, cutting down time. And the other is, of course, fraud. And if you're not
Mm.
dealing with those 2, you're not strategically aligned with your board, your operations, or your partners, or your clients for that matter.
Yeah. It's and so then if you have the understanding at a C level, at a high level, I guess that's saying everything trickles down, right? So
Yes,
then your team members and your leaders and your managers and the team members that are rolling up their sleeves and doing the work understand the level of importance. And so that becomes top of mind, especially in closing, as you were saying. I mean, that's where all the action is, right?
that's right. And the ripple effects of that are insane, because historically what's happened is that um, the industry is such that it starts off with the lead, it starts off with the speed to the lead, it starts off with the speed to like getting applications done, and everybody, all the stakeholders are involved in ensuring the transaction is handled quickly, swiftly, so that everybody can earn their living in commissions and fees
Yes.
and so forth. Now, we've seen what happened in 2008 where application fraud led to such a disaster that the whole world was hit with it. Now we're
Right.
seeing post that climate where, okay, without the equity, and if the equity is robbed or reps and warrants are not made right, the transaction doesn't close. There's
Right.
fraud happening at that level. Okay, if you
Yeah.
ignore some of the cross verifications needed, you still let the transaction close. The post close effects, ripple effects that I'm leaning towards are that you're going to spend a lot more money in post accounting and QC to fix those problems, which you cannot necessarily, um, you know, you can avoid them if you're dealing with solutions like ours that can at upstream take care of the problem and remediate it at a fraction of a price. The second is not just a QC and accounting cost that can be taken out, it's the ratings of those assets can be better. And that leads to securitizations can be better. That leads to the investors on those can have better yields. That leads to those investors do have pools of money coming in from many of them actually being original home buyers. If you talk about how the money operates in all different levels, it's like a full circle, right? So
Right.
yeah, so it's like it's so important to ensure that data is aligned and these processes are put in play
Yeah.
um, and provide efficiency.
It's really interesting. I want to go back to something you just said. You were talking about, how fraud and risk can actually hinder the loan life cycle, if you will.
Yeah.
Affordable housing is top of mind for everyone, and it's interesting. Like I just got off of an IMB call with National MBA, and we were talking about affordable housing, and I shared, and this is kind of a segue into our next question I wanted to bring up for you. We shared about all the initiatives at the California MBA from an advocacy point of view and all the proposed bills that are on docket. And what was interesting is we were able to look at these proposed bills and bring them to the perspective of, they're not about zoning, they're not about building more affordable housing. They're actually about proposed bills that will increase cost to originate a loan.
Right.
And so, to your point, we're looking at, we have to make housing affordable. Well, how do you get a house? You get a mortgage.
Right.
And so, if we keep on layering mortgage with legislative initiatives that cause more work for IMBs, or we're not protected with fraud guards or fraud security measures as funding shield, all of those things cost a
Bundle.
mortgage more and more for
Yes.
closing. And
Yes.
so your initiative, really a funding shield, and your new title company support the methodology or concept of affordable housing, because you're talking about ensuring that the investors are getting the very best deals on the loans when they're pooled. And if that's the case, then the lenders will be able to offer that deal to the consumer, the lower rate or the lower cost of the mortgage, correct?
You circled it up perfectly. I mean, it's a whole circle, right? So
Yeah.
if the cost of origination is high, tech with fraud prevention in place, cutting down time and cutting down fraud brings down the cost of origination. And
Right.
then post close, there's also additional costs going forward that are burdened by lenders, and
That's
they
right.
will only charge more if they can't really control the cost. If you can bring that cost down, it benefits all involved, and it benefits the ratings on the asset, and it benefits the yield on the asset. So we're looked upon by many of these organizations not as a fraud prevention company alone. We're looked upon as a infrastructure layer of a solution in closing that's
Yeah.
providing an enterprise solution that's cutting down cost and cutting down fraud, and we're profit partners.
Yeah. I love it. Profit partners. I love it. So I would be remiss if I didn't bring up advocacy in our industry as a responsibility. You also serve as a California MBA board member, and I will say an extremely active California MBA board member, host the Mortgage Innovators Conference, involved in many committees, support the growth of California MBA, just an all around advocate. Can we talk for a second? Can you share with us why it's important for technology leaders to engage in state level advocacy in industry policy?
Well, so many different reasons. I mean, as a young company, when we started off, our life started off with wanting to engage with an association that we could learn from its members. And obviously, California MBA made sense for us. And very quickly, we learned that it had this culture of, you know, very senior executives, veterans, large companies, small companies, roll up their sleeves and come in and contribute and volunteer and advocate, all for great reasons. And we learned as new members what that really means. So we've
Mm,
been a poster child that found its training wheels and grew to finally be on the board since the year that we joined CMBA. Very
yeah.
much enjoyed my journey in it. A lot of learnings in there. California State is one of the largest. It's a role model. It's the one that sets the bar up so high, so the rest of the country learns from it, follows from it, and so forth, and works with it. So advocacy efforts in California State have all sorts of different challenges that allow you to understand the mortgage companies' challenges in this space. You know, the rates, the jobs, the homes, affordability, the fraud, the ability to execute quickly or not, home rebuilding with the fires. I mean, there's so many elements that are in play that affect the community. And if you can't put together a team, not just from mortgage side, what was really what is really good that I've seen happen with all what I just said is this coalition that happened in the last couple of years, bringing in the home builders, bringing in the insurance guys that are basically attacking collectively all the challenges, and the ability to get in front of the congressmen, the senators, the assemblymen, who, of course, are elected by many of the citizens and people in the state, but they're not necessarily as fully informed of the complexities that this industry deal with. The
Yeah.
CMBA does a wonderful job of putting all those issues in one simple format and bring in the representatives, members, board members into a position where they can actually address those issues and knock on the door and make weight off the issues involved, um, with the folks that need to hear from it. So it's very important. If you don't advocate, you're missing out.
Yeah.
Advocacy is just normal business every day. If you don't acknowledge it, it's present. You're doing it or not, you're in the industry. If you make an extra effort, you're doing a little more than not knowing that you're already part of it. So it's
Right.
very important to actually make attendance and have your voice.
Yeah. I appreciate that. We talk about at the California MBA, we talk about advocacy as not being about politics, but about strategy.
Right.
Um, Ike, thank you so much for your insight, for your leadership, both at Funding Shield and with the California MBA, for everything you give to the industry and being for a personal friend of mine. For our listeners, Funding Shield is a proud supporter of the California MBA events, our MIC conference, the Western Secondary Conference, LARC, and our legislative day. Be sure to connect with Ike and his team at any one of those conferences or about anywhere, any conferences in the industry. They're all over the place. To our audience, thank you for tuning in to Connect. Advocacy is constant, risk is constant, staying informed is not optional. Until next time, stay engaged, stay sharp, and help keep building with purpose. I thank you for your time today.
Thanks for having me. I love that last line.